setups in real time. Hit subscribe so you don't miss the next session.
Still doom scrolling? Brain rot taking over? You'll focus tomorrow, right? But what if tomorrow never comes? What if it all started with one small choice? The world won't wait for you. Opportunity is moving right now. One decision is all it takes to shift your momentum. Fuel your mind and watch possibilities open up. Small wins stack up, focus sharpens, growth begins. Everything changes the moment you focus. Lock in and make the switch today. Bring your ambition into focus. Trade with Switch Markets.
Are you still trading everything manually? More traders are moving to automation, running strategies 24/7, removing emotion, and staying consistent. Now with Switch Markets, you've got the tools to build and run your own automated trading systems, so your strategy delivers even when you're asleep.
Meet Switch Markets, a broker for ambitious people who want to trade the financial markets.
You mean that I can trade things like Forex, stocks, even gold with you?
Yes, you can even trade the coffee bean market with us.
What about digital currencies? Can I trade them too?
Absolutely. Maybe now's your time to get in.
Oh, and are you regulated?
Yes, we are.
And how easy is it to deposit and withdraw? Will you charge me any fees?
It's easy. Deposit and withdraw instantly. Nice and simple. And unlike that guy, we won't grab any fees from you.
Do you have a low spread trading account?
We certainly do. Pick from our zero commission or our low spreads account. It's up to you.
Okay then, what makes you so different from every other broker out there?
Our 5-star rated real human customer support and our perks package worth thousands. No other broker can beat it.
So, who did you say you were again?
Switch to success. Trade with Switch Markets.
Getting started in trading shouldn't be complicated. You can open an account, get set up, and be ready to go pretty quickly. Now, if you've been thinking about it, take a look. Click the link in the description below. You can even start with a free demo account.
In trading, like climbing, the hardest step is to pause, hold, and trust your position. Ambition pulls you forward. Focus keeps you steady. Together, they take you higher. Bring your ambition into focus. Switch Markets.
Already trading with another broker? Fair enough. But if you haven't looked around lately, you might be missing out. Now, Switch Markets is picking up awards, offering tools most brokers don't, and their support actually shows up. It might be time for you to switch to Switch Markets. Click the link in the description below to get started today.
Discipline starts before the first punch is thrown. Focus sharpens in silence. Repetition builds control. Every movement prepares you for the fight ahead. Trading isn't luck. It's preparation. It's grit. Your fight is won long before the bell even rings. Champions trade with Switch Markets. It's time to bring your ambition into focus.
Are you still with the same broker? Now, there are better options out there. There's more tools, better support, and a platform built for traders. It's time that you demand more from your broker. Take a look at Switch Markets. Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the Friday market wrap-up today. We're going to talk a little bit intraday trading. We're going to talk some swing trading. We're also going to talk about an incredible development in the financial news markets that absolutely is blowing me away. I've been talking with folks all around the world today about it, and I cannot believe it. I saw this news break last night on a different guy's podcast, and I have to tell you that I've never seen anything like the Truth Social API and what is going to happen to the world of trading. I think we are in for some real massive developments here in the next 12 to 18 months in our markets. I don't really know what else to say about it other than I'm going to cover it. I'm going to give you my opinion on it. And I never thought I would see the day, but we are quickly seeing the day. So I want to welcome everybody back to the trading room. Big picture, it's been a long week. Been a good week, though. We've had some really nice trade setups. We've had some good intraday trades, some good market profile stuff. We've had some really nice there's one swing trade that I'm going to break down for you here. We have the banger in IBM. I'm going to recap quickly. SpaceX is going right down where I would like to see it, so I'm a happy guy going into next week's trade. Gold, our gold breakout is still on the board, and it's really starting to make me highly confident in what's going to happen beneath last month's low in gold. NASDAQ 100, we got a new trade idea out that I'm going to recap, and also the war. We're going to give you a war brief on U.S. oil and where exactly it can go. We had a beautiful buying opportunity yesterday in U.S. oil. I want to cover that as well. So good to see everybody back. Jason Maxon, what's up, Shane? Trump's still sour about that election he lost. I'll tell you what, the proof that they laid out, I don't know if you guys have read any of the documents that the government released about the Chinese intervention in the U.S. election of 2020. Oh, man, I tell you what, it makes your head spin. There is so much meat on the bone there. It's really the timing of it's precarious because we're going into that election cycle. I've talked a lot about how big of a market driver the election cycle is going to be. You bet. And the last night's address definitely shows you where exactly the government is with regards to the election. This feels to me like a full court press now until Election Day. We've seen a lot of asset values jumping around, and that's going to be a big deal, a big deal going into November. That's for sure. So it's a good observation, Jason. I mean, they are getting started with the election stuff right now. We're in for just a major 90-day tilt. This is going to be interesting to me. Marcin, good to see you, Marcin. I'm going to cover a swing trade. I'm going to break down an actual trade analysis that was sent to me by a trader. It's in the EuroCAD. I'm going to get to that here in a few minutes, but we've got an entry point, some take profits, and a stop loss. I'll break down the trade, what's good, what maybe isn't so strong, and then what we can maybe expect moving forward. But really good exercise here. Really the first time I think we've done any of this, an actual trade analysis. I've got that drawn up and ready to go. So Alec, hi Shane, hope you're well. Happy Friday, everybody. Let's see over to How to Trade community. Ralph H. Let's see. Good to see you, Ralph Antuku. All right, guys, let's go ahead and get on with the program here today. Friday strategy session, intraday swing, and Truth Social API insights. I'm going to talk a little bit about the Truth Social here in just a bit. This one was a good one, though. IBM. This one was a fantastic read. We were buying 205s. You remember how we did it. We pulled up a yearly chart. We really worked right from this range. Let's go back to it. Let's walk this down to a monthly and show you the exact range. But you could see running from these lows that developed back in March of 2023 all the way to this high up in June of 2026. This area right in here, 62%, 201.50, coincided beautifully with 200, and we shaded our entry right at 205, and it paid us off quickly. We were looking for 215 to the top side. You can see we came right down, saw 204.45, and then a rally and a close up there right around 220. Fantastic trade. Since then, we've traded down. Remember, that's why I like to be conservative with my profit targets. You know, there's an old saying, 90% of the people that walk into the casino win, and about 20% leave the casino a winner. So what we have to say is this. We could shoot for 250, 240, 260, 280, 300, whatever we want, but we may actually get washed out before the getting gets good. This is really sums up my trading philosophy in a nutshell. Beautiful level coincided with a round number, which was 200. We also had an opportunity to shade entry to a round number at 205, hit it perfectly, bounced up in and out, $10 on the share, about 8%, or if you were trading some sort of derivative, potentially a CFD product, you could have been in that for 1,000 pips. Very nice. Very nice, very clean. Sometimes trading really is easy. This was another trade that worked out very well for us. SpaceX. We were looking to sell SpaceX. We were looking to sell SpaceX right underneath this swing low, which is at 147.11. We were selling 146.90s, I believe, and then we were taking off 141.90s. Really just a nice move. This one's gone really exactly like we thought underneath 150. I thought that if 150 gave way, really beautiful trade. A lot of bidders right there protecting this thing. A lot of bidders. And then what happened once the bidders were gone? That buy-side liquidity left the market. What happened then? Boom, right down to 135. Now, what would scare the hell out of me if I was a bull here, if I was a SpaceX bull and I bought 200 or I bought 175, what would really be keeping me up at nights is nobody's defended 135. 135 was the institutional open. That's where the banks, that's where the smart money, that's where the big-time investors got in. They were feeling really good up here. A lot of them took the money off, no question about it. Now we're trending south. 1, 2, 3, 4, 5, 6. How about that? 7, 8, 9. 9 out of the last 10 days have been negative for SpaceX. Scratched the launch yesterday. They're going to try it again next week. This does not look good. I could see SpaceX stock maybe getting right down in here. 125 was a big-time level for me. We're defending that level a little bit. Look for price really to rotate, but the fact that it broke beneath 135 should scare everybody that's long SpaceX. I think we're going to have a chance for a nice discount buy. I want to see price action for a couple of more days down here. I think we're going to be in good shape, though, with a potential bid from 125. Just not really ready yet to pull the trigger. All right, we had a trade idea out. This is our gold trade idea. This one, I've got a lot of confidence in. 39.41.75 sell. Essentially, what we're looking to do is sell beneath last month's low. No secret here. These key numbers, these big-time zones are very, very, very important to gold especially. Monthly low. That low is down there right around 39.42.55. So we're looking to sell underneath that low and catch that initial break. You'll see that this month's low right there is 39.59.72. So when I take a look at this chart and I say, okay, what's going on here? Daily chart. You can see what we've got. We've got compression. We've got compression right there. So you see we're trading sideways. We're getting compressed. That is the level. If you're in the spot gold market, I don't care what broker you're using. If you're trading gold futures, whoever you're going through, whatever you're doing, be sure that you know last month's low, know June's low. I don't care about the rest of the technicals on the chart. I genuinely do not care. Last month's low is where the game is going to be fought. I believe it's going to go relatively soon. The only thing that I don't want to see happen is I don't want to see maybe gold opens on a Sunday, opens the trading week beneath that level. That'll really screw this trade idea up. But right here, I think we've got enough room to where we're not going to see that over the weekend. Trading right now 4,017-ish. I'm a net seller down there beneath last month's low. I really like that one. That's a fantastic trade opportunity. We don't get many of them. And you can see topside resistance right there, 4064. If you wanted to sell later in the day and got a chance to sell 64s, yeah. If you get a chance maybe Monday to sell 64s, yeah, probably. Right up in this zone, that would be what I would call the top of our range. But the longer that we compress right in front of this level, the more confidence I have that we are going to break to the south in a big, big way. So I definitely wanted to cover that as well. I know most of you trade gold. There's no reason why we can't talk a little gold. We'll come around. We'll circle back around for maybe some intraday trades here after we cover a few more things. But a big picture, what we're looking at today, especially as it pertains to maybe the oil market and the gold market, not necessarily the best day, I would say, to be looking at market profile stuff because it is a Friday, and a lot of times that volume, especially in the summer months, can definitely dry up on a Friday. But we are going to look at probably gold. We're going to definitely look at gold, but maybe crude oil. I have to go ahead and see exactly how we're getting treated with that rollover. We'll check that out a little bit later on the stream too. So I wanted to go ahead and touch base with that. That's a big-time level, and I think it's one that we need to be aware of. Okay, here's a trade idea. NAS 100 support in view. This is fascinating stuff because we've been just in a tear of an uptrend from the NASDAQ. No question about it. It's been this way for a long time. If you wanted to go back to COVID, really beginning with the end of the COVID, I guess the end of the COVID plunge, so middle of April 2020, you've been in an uptrend. I mean, the NASDAQ has absolutely exploded. The advent of the cheap money, the 0% interest rates, all of a sudden the AI boom has taken these stock prices to all-time highs seemingly regularly. So what do we have here? Well, we have sort of a long-legged doji that developed last month in June. We've got a negative price action this month of about 5%, 4.5%. We were down 5% earlier today. So what do we have? I want to outline this macro support level. I think it's absolutely key that we do look at about that 27.710 area. Entry point, it can vary a little bit, but the key level down there for me is about 27.825. NASDAQ moves big. Typically, you have to give it a bit more of a shade and not try to hit that entry point exactly perfect. So you got that long-legged doji that has developed there in June, and now July, you're seeing a bit of a negative price action, about 4.5%. We were down 5 earlier today. And then right there, 27.710, 38%. We're looking at about 27.825. Could be a very, very nice long, maybe a rotation back up to 30,000. We had some really great opportunities up there to sell 30,000. Right up in here, took a major run, but that was a good one. These right here, though, they just fell just short. And that's frustrating. That really is frustrating, but it does suggest that the sell side liquidity was dominant from about 29.8 all the way up to 30,000. So pretty good selling opportunities up there. If we get it again, I have no problem selling 30,000 again. I really don't. I thought we had an opportunity today potentially to get this bid going. You'll see that our daily low is down there at about 28,215. So we're looking for 27.825, about 1,000 points or so. Could easily get that next week. Could easily get it. So we're watching that closely. I think that's a fantastic trade to definitely be keeping a close eye on. Definitely want to keep a close eye on that one. Okay, let's go ahead and get up, not over to the news, but let's go to the MOU. The MOU's over. We've been showing this slide forever. I mean, it is over. It's wartime. So here's your briefing from the front. Not good. Nothing is really working very well here for the United States or Iran. Seemingly a stalemate. You can see live updates. U.S. intensifies southern Iran attacks. When they attack southern Iran, what are they looking to do? They're looking to open up the Strait of Hormuz. They're hitting all of those drone sites. They're hitting missile sites. They're trying to open up that region. Potentially, the idea would be, hey, listen, if we wipe that region out of its munitions, we may be able to get boats in and out of there and deal with longer-term missiles and drones, longer-range missiles and drones. That essentially looks like it's the plan. U.S. intensifies southern Iran. So southern Iran, you're thinking Strait of Hormuz immediately. U.S. hits bridges and a port in southern Iran, destroying the infrastructure. This thing is really escalating. Iran and U.S. widen attacks as renewed conflict shows no sign of de-escalating. Trump is edging towards America, another forever war. That's all election-driven. That type of, that's sort of what you'd expect out of CNN. Trump leans toward expanding U.S. military operations in Iran. I mean, this is going to happen, it looks like. It really does look like it's going to happen. In our oil markets, that's sort of our confirmation. When you want to see what's going on in the war, I don't even know that you need to read the news. You probably just look at the oil markets. Don't get confused by this chart. I'm going to make it really simple right now. Okay, so what do we have here? Long-term 38% level monthly, that's that long-term weekly level. Talked a lot about that one. Look at this pullback. This area that we had highlighted yesterday, if you don't believe it, go back and watch yesterday's stream. We talked U.S. oil. I said this in here, pretty good stuff, but this area right in here, the distance between the 38% level on the daily chart, spike low, spike high, pullback right there, 38%, 77.30. And then what did you have right there? You had 78.44. So you had this range right in here of about $1, a little bit over $1. That was a major support zone. You can see that low, 77.93, exploded to the top side. The bidders bid. They stepped up from 78, and this thing is just taken off on the news cycle. So absolutely a lot going on right there as it pertains to U.S. oil. It is on the move. Does not surprise us. Going into the weekend, you've got a war. You've got rekindled hostilities, fresh kinetic exchanges. Anything can happen over the weekend. And if we haven't learned anything since this war started 4 months ago, is that the weekends are when business is done. You could hear a peace deal announced. You could hear a ceasefire announced. You could hear enhanced attacks, greater large-scale attacks. If the U.S. invades Iran, it's probably going to happen on a weekend. If I had to bet, I would say it happens on a weekend. So we're watching closely. I think that weekends are incredibly precarious given this news cycle. Be very careful with what you're doing. As far as gold goes, gold's one thing. We're going to get back to gold in a minute. But the U.S. oil charts, this area right up in here, I really don't hate selling it. I hate 52%. And you're not supposed to use the word hate, but I hate it. 50%, I've taken more losses trying to trade 50% on intraday time frames. That was about the first 4 years of my career. I was trying to trade 50%, and I finally quit. I said, I'm done trading it. However, there's always howevers. The however here is this. I've got converging indicators, and I've got long-term converging indicators. What do I have right here? Weekly Bollinger midpoint, 81.78. That's big. Weekly, 13-week EMA, 82.17. That is big as well. 50% levels, 82.02. So what do you think we should do? probably going to need to be a seller, a net seller, probably right around 81, 81.80, 81.78, 81.74. It's not bad. We're going to go ahead and put that trade down and see exactly what happens here. One thing I will say, you don't want to hold a trade like this over the weekend, and you also want to be very shrewd about what you're doing with your risk, meaning if the wrong news cycle comes along, the wrong story comes along, we could be in trouble here. The market could absolutely explode to the top side. Now, you can see Trading Dome, U.S. oil is on the rally. I mean, you're going up, you're 81.46, somewhere right in that zone. More than likely, we're going to get in the market. More than likely, we will get in the market here. So 81.74-ish, something like that, could be a very, very good area for us to be hitting to the short. As far as the stop loss goes, I mean, the initial stop loss is relatively simple. You would be looking probably to put it up around 82.29. That's a big risk. It's 50 pips, so you'd have to dial in what you want to do accordingly, but it's not going to be that big. But I would be looking for something like this, maybe an 82.29. What does your profit target want to be? Well, we could dial this in for maybe a 1 to 2 if you wanted to take a position, looking for maybe an 80.75, something like that. It's not a bad trade. However, I don't know that we're going to stick to those parameters. When this trade is executed, if it goes during this live stream, we'll manage it in real time. We will watch, and I will watch. And this trade right here, that's not a bad way to approach it. That's not a bad way to approach the initial onslaught of this level. It's not a bad way to approach it. However, things may change. We may hit 74 perfectly. We may hit it perfectly and have price go in our favor 25 or 50 pips. Then probably we're just going to take the money. Probably just going to take the money. Now, by the same token, price may go against us, but it may stop at 82, and we may get a nice little swing high develop, maybe on a 5-minute chart or a 30-minute chart. We're going to move our stop loss down. There's no point of sitting there and taking that extra risk if we don't have to. However, if we were going to position trade this, potentially a swing trade, which we can't do today because it's Friday, and if you're holding positions over the weekend during this wartime news cycle, you're a braver person than I am. I don't recommend that. That is high risk. Is it high reward? Potentially, yes. Is it high risk? You can lose everything in your account and then some. You might have to sell the car. You might have to mortgage the house to pay the margin, what the broker's going to want from your margin, especially if you go home short and crude oil gaps up to $85 or $90 on a major U.S. attack over the weekend. You cannot do that. You're not George Soros. You're not Warren Buffett. You don't have that kind of money. Bottom line. So what are we going to do? This is one I think is worth getting in and monitoring. If we have to cut it off at a loss, we will. If we have to take a smaller profit, we will. But we're going to stay fluid in our thinking. But going in, the initial trade, this is what I want it to look like. That way, if it blows up in our face, we know we're pulling the Band-Aid off and getting out of the market. Highly recommend always having stop losses down somewhere. However, if you don't use a physical stop, everybody needs to be using mental stops. You need to know when you get out of the market. You notice a lot of the scalping we do, I use mental stops. I have an idea of when we're going to get out of the market, and then we tighten accordingly. Sometimes it works. Well, most of the times it works. Yesterday, we ended up cutting off a winner. If you remember right at the end of that S&P 500 futures trade, right? Maybe we'll have to get some revenge. I'm feeling like we need to do some trading today as well. That one's definitely down. This market's coming our way. Potentially, we'll get our sell probably in the next several minutes. I'm interested. Let's go ahead and see what happens here at that key level. All right, we got a bunch of other stuff to cover here today. Got some more fundies. Let me see. Enzo the Picker. Shane, you use the weekly, daily for entry, but it's still an intraday trade. You got it. That's sort of the trick of all this, Enzo. I watch a lot of traders. I've watched a lot. I've had a lot of conferences, one-on-one meetings with traders. I've watched the way they trade. I've watched more YouTube traders than I even care to mention. I've watched real traders. I've watched veteran traders. And one of the biggest things that I've noticed over the last 15 years, and you could call it a secret if you want, or you could call it just a tip, is your long-term levels give you a better idea what market structure truly is, especially when you're using things like Fibonacci's. Now, crossovers, 5, 8, 13, scalping crossover strategies, that's different. But if we're talking about getting into a trade with a lot of confidence, I want my long-term levels involved. I know that we're fighting a news cycle here. I know the risk of that trade, 100% up and down. I also know that I don't like 50%, but I'm smart enough to know that 50% falls on 82 even. I know I've got a Bollinger midpoint at 81.78. I know I've got my 13-week EMA right there at 82.18. I've got a lot of things that fall between 81.75 and 82.25. To me, it's worth the risk of potentially calling today's high. So when we start scalping on shorter time frames, a lot of times we lose track of what the big picture really is. Those big time levels, you can scalp them all day long on intraday time frames. If you find a sweet level, you can do that kind of work. So don't just think that because I place a trade on a daily chart, it's an automatically a swing trade. That's not true. This trade right here, we may only be in it a few minutes. But the levels are what's important. The market structure is what's important. That's incredibly important. Definitely want to point that out. Not too many people do that. I have seen more traders on YouTube in the last 2 weeks, 3 weeks. They all do the same thing. They sit there and they trade the E-mini NASDAQ futures. They do it because it's crazy. The market's all over the place. And they do it because they can throw down trades and show the market going into the green and fool everybody into thinking they're going to make a fortune trading. That is why they do it. We've traded the E-mini NASDAQ here. We might do it today. But we're going to use our heads. We're not going to get too carried away. We're going to understand that's probably the riskiest thing on the table right now. No question about it. No question about it. E-mini NASDAQ makes WTI crude oil just look like it makes it look like cookies and cream. It really does. It makes it look like a soft pillow, like it's easy. I mean, take a look at the trading dome here. I mean, this thing. Look at this. Look at this. Thing's everywhere. They're not even. Are they even making a market? Look at this. The dome can't even track that kind of action. This is what I see. This is what I see out of traders all around the world. People trying to be influencers, trying to tell you guys how to trade. And what I'm saying is, consider the source of everything. Are long-term levels on short time frames good? You bet. They're real good. Is a weekly Fibonacci retracement level more important than a 30-minute Fibonacci retracement level? A million times over. A million times over. So that's the way that I work. But a lot of folks don't. A lot of folks will sit there. I had a partner when we first started said, a chart's a chart's a chart. It doesn't matter if it's a monthly chart or a 1 minute chart. The technicals are all the same. A chart's a chart's a chart. That is not true. That is not true. 1 minute charts are inherently choppy. We do it. We trade them a lot. So, and we're going to get into that right now today. But I've said enough about that philosophy. But the long-term levels, those are the levels that when you get a fresh shot at one, this 38% was beautiful. And what I'm saying here is that 50%, I don't love 50%, but there should be enough action there where we can pull a scalp type trade out of it. We could pull a successful intraday trade out of it. And if we get wiped out, we get wiped out. It's all built into our risk matrix. That's what it's all about. It really is. So I hope that helps. Interesting and makes so much sense. Well, it makes sense to me, Enzo. And been around a few years. Makes sense to me. That's what I would say. Let's go over to our Dell. I forgot to check in on Dell. Look at this. Major bounce today in Dell. Very disappointed. Came right down to the top of that gap. This gap, though, actually truly starts down here on that tail. It's really tough to draw the rectangles on MT5 properly. But the gap is somewhere right down in here. So still in this trade. I'm not real happy. Bounced up almost a break even. I thought we were pretty much home earlier today, but Dell's getting a little bit of a bounce. Still believe we're going to trade down, but it's back up above $400 a share, which I don't really care for. We were looking for about 350s, 340s, somewhere in there. I think we get them, but this is a great example of a swing trade. Pure swing trade. When did we enter this one? About over a week ago. We check in with it about every day, and you can see exactly what's happened to us. We've been in the market for about, 2 weeks? Something like that, 7 sessions. Let's go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So 2 full weeks. 2 full weeks. Yeah, we took that on a Monday. I remember because Trump pumped the market right here, and then we got in. We're still in pretty good position, though. I like that gap to be filled. I like that gap to be filled a lot. I think we're going to get that kind of opportunity. All right, let's go ahead and take a look at a few fundamentals, and then we're going to go over an actual trade analysis that was sent to me by a trader in the How to Trade community, and wanted to reach out and said, Shane, here's my trade. Take a look at it. So I've got the charts all marked up, and we're going to go ahead and look at it here in a second. Got a few fundamentals, though, first to go over. Today was the Consumer Sentiment Index. It's one of those things that a lot of people don't pay much attention to. We also had housing starts and building permits. Housing starts were up significantly. Building permits, not so much, and that's all seasonal. Housing starts, typically you're always going to see them in North America go up in the spring and summer months just because of the weather. They're always building down south, places like Florida, Georgia, California, Texas. They build year-round down there. But how about the northern places, maybe places like Wisconsin, Michigan, that northern Midwest? maybe Iowa, places that are sort of in the Midwest that really experience inclement weather. Montana, for instance, this is the time of year we used to build houses. So that's all seasonal. I wouldn't get too carried away with that. Don't read too much into those. The consumer sentiment's interesting, though. Came in at 54.4. This is a preliminary reading. Better than expected and better than the previous release. One-year inflation expectations for July, 4.2%. So a lot of folks actually believe that inflation is going to get better. That is sort of a knee-jerk I would say a knee-jerk reaction to gas prices falling in June. They are going right back up. We're back over $4 here. I don't know what they're at where you are in the world, but $4 a gallon here in Montana, and that's up from about like $3.39 2 weeks ago, something like that. Crude oil on the rally. We're going to get entered into our trade here in just a second. 81.65 is what we're printing now. So we're going to watch that closely. All right, Atlanta Fed GDP now. I wouldn't worry at all about that 1.7%, though. Very low reading from Atlanta, so they're not anticipating GDP to look great. Our fundamental of the day is the University of Michigan's Consumer Sentiment Index. It rose to 54.4 in July, beating expectations of 51 and marking a second straight monthly increase after May's record low. That's the key, May's record low. That's what we're focused on. That record low in May was really the onset of the war. It wasn't the onset of the war, but it was when we started feeling the economic brunt of what was actually happening in the Middle East. Higher oil prices, higher gas prices, things of that nature really hurt sentiment. And really all the Michigan Consumer Sentiment Index is it's a telephone survey. They call a bunch of people on the phone. Maybe it's done online now. It used to be a telephone. And what they would do is they just call, hey, how you feeling? Hey, how you feeling? Hey, how you feeling? And then they go through, they take all the results, all the results of the survey, and they decimalize it into one cute little statistic that means less than nothing. So we're looking for trends. That's what we do. And what you can see right here is you can see nice big downturn. Then life's pretty good back 2026, right? Beginning. Remember, what were we thinking in January and February? Lower interest rates, higher growth is what the year started off as being. I had us going into the clubhouse in December at 2%. I thought they were going to get in. I thought Warsh was going to slash aggressively. And you went to war right here. And then you could see exactly what happened to your sentiment. Now it's bouncing back a little bit. But these, once again, I believe these are fake just because this was done during the ceasefire. Ceasefire's over. It's a full-blown war now. And my guess is it's going to escalate. I can see this getting really serious really quickly. And this time around, you're not going to get the taco. You're not going to get the Trump always chickens out, believe me. All right, let me see you. Alec, I don't understand your U.S. oil idea. XTY, USD is trading above 82.40 right now. Yeah, we're looking at U.S. oil. We're looking at the U.S. oil CFD. So, let's say you were going to go and do this right here. Let's just pull up your, XTI. Okay, so there's IC markets, light sweet crude. What you would have to do to recreate, because you'll notice that the prices are different. My guess is that you already rolled over to that SEPI contract. I'll go ahead and pull that in a second. So you can see right here, Alec, it's the same. The fundamentals are all the same, the technicals are the same essentially, 82.59, and then we're looking at 83.02, and then 50% is 83. So you got converging indicators, and it won't really matter what you look at there as far as your product. But you're right, you're 100% correct. What we're looking at here is just two different products. I look at the U.S. oil CFD because a lot of folks look at this one. Let's go ahead and do a quick. Let's do a quick exercise here, though. This is actually a good time to point out rollover. The big thing about CFD products to remember is that they do track the underlying asset is a futures contract. It's always a futures contract. We can say spot doesn't track futures, but that's not true. Spot typically has a good relationship with futures. There's a bit of a difference between a spot market and a futures market. The difference in the price of those assets is called the basis. Agricultural hedgers take basis very, very seriously. But in any case, we're not going to get into basis. I don't want to write a thesis here. We don't need to do that today. We're not economists and we're not farmers. We're traders. So WTI crude oil right here, right? What did we roll to? Okay, we rolled to SEPI, looks like. Let's see, U. No, I'm still showing, Q. So U would be September. So let's go to our quotes. The way you tell your front month is where we roll to. So September, CLU. CLU6, now we're trading 172 to 59,000. The one thing that I would point out is U.S. oil is now tracking that September contract. So your XTI is still showing about 82.40. That means that you're still tracking, your XTI is still tracking our August futures. See the price difference? You see that, Alec? So you're pricing 82.40. So your CFD, that XTI USD, is still tracking August. You're tracking Augie. The new front month and what WTI crude oil is now worth is about 81.50. That's September. That's September WTI futures. Be very clear on that. I know it's difficult. Okay, we're now rocking and rolling. So the biggest thing I would say, Alec, is just be current. Stay as current as you can on this, and that's going to be the September futures contract right now from the CME. So you definitely want to be aware of that. Okay, now we are officially short. We got hit at 74. Let's go ahead and take a look. Let's dial this down to a 1-minute chart and take a good look at price action. Okay, sort of very, very nice reaction initially out of the first minute. You can see you got a big tail. Now we're starting to grind up just a little bit. You'll notice that the volumes aren't exactly great, but they're not bad. They're robust. Okay, so it looks like we're going to take a bit of a draw. Now remember where our stop out is. It's right up here. Now a couple of things to think about. Let's go to the telestrator for this, and we'll break down exactly how we want to get this business done. We're fighting an intraday trend of about 2.76% in U.S. oil. Now, let's say this price is just a freight train and it won't stop for anybody and we get stopped out. Is the trade over? Not necessarily. We step back to our longer time frames. Maybe we get a big bar here and then maybe we get a close down here for the day. Then all of a sudden we've got fresh opportunities to go to the short and stop ourselves out above that price action. That could very easily happen to us. So you say, Shane, why don't I always just wait for confirmation? That's what we would call waiting for confirmation. Shane, why don't you wait for confirmation? Well, theoretically, we can do both. Now, personally, I've been doing this long enough to know that a lot of times when you wait for confirmation, you miss out on some really good stuff. Some really good stuff. So if I was to wait for this to set up perfectly, maybe it sets up perfectly. Maybe the daily goes up here, and then we get a daily close right in here, and then I've got my trades pretty much made for me. Stop up here, profit target down here, key levels, my resistance zones in here. It's all done for me, right? Well, what happens, and realistically, what happens, though, if we don't get any of that? What happens if price just sort of goes up to my Bollinger midpoint, sell-side liquidity steps in front of 82 and absolutely dominates the market? It means we're in rough shape is what it means. It means we missed out. It means that we did everything right, and we still didn't get anything for our money. So for me, I'm sort of at peace with if I get swept out against the trend here, I get nailed. If I get nailed, I get nailed. But I know that's robust resistance, and I know we have a chance. I know with our indicators we have a chance. We also know today is definitely overextended. We also know that rollover is a very real thing. So right now, we're printing about 81.77. Let's see where this spins for the next several minutes, and we'll figure out exactly what we need to do as we roll into the clubhouse here towards the end of the session. Because remember, we're not really interested. We're not really too interested in going home short. I'm not. I want to see some good price action. Let's see if this price falls down to maybe 81.20, maybe 80.80, maybe 81.50. And gives us a good payoff. That's what we're looking to do. We're managing this thing in dynamic terms on the fly, which when you trade for a long enough time, you'll be able to do that too. It's just about having your table set. I feel fine with it. There's nothing there that we're risking that we're not out of bounds doing. 1 to 3% on any given trade. Even if you got 5% on that trade, it's not the end of the world if you lose. But the potential payoff is very good. We'll see. Odds are on our side there, though, I'm telling you. What are we trading now? 81.69s? Call me when it hits 81.40. Then we'll start talking. All right. I got a trade analysis. This is something new, and I encourage all of you, if you want to contact me over at howtotrade.com, send me a private message. Send me the exact parameters of your trade, and I'll select a few of these over the course of the week, and we'll break them down. I think it's going to be a pretty good addition to what we do on these live streams that are going to be changing in the near future. We're going to be doing a lot more trading, and it's even going to be a new look and everything. So I look forward to a change. I've been doing this same type of live stream for a long time. I really enjoy covering some of the news and talking to you guys, but there is a time and a place where we just need to be traders and just need to sit here and trade. So we're going to do a few things that are going to be a little bit different. All right, Alec, I'm glad I cleared that up because that is a very, very big. It's not a mistake. It's just it's tough to know which crude oil product is pricing which other thing. All right, here we go. Trade analysis. This was a dandy. This is a pretty good trade. The trader, sophisticated trader, had a very good silver trade earlier this year, I believe. And this was the analysis on the Euro CAD. Now, the entry point was done, I believe, a few days ago. Let's just say it was done right in here. Let's say the 13th of July, so that would be Monday. This would be a true swing trade. Clearly, a true swing trade. So when we're in a trade like this, the entry point was right around 160-112 to the short. So you had some really nice compression, a couple pullbacks to break even, sort of a nice, really nice move right there of about 60 pips. And now it looks like this wave is continuing. It really looks like this wave is continuing. From an analytical standpoint, I don't really see much wrong with this trade. I look at it and I say, according to everything that I have, I say, yeah, I mean, your entry point really was a thing of beauty right in here. It was. You got that initial that nice big move. Now you're coming down. Now you're compressed a little bit, pulled back to break even. One of the reasons why I'm not a fan of moving stop losses to break even, well, I'm up 50 pips. You move to break even. You got stopped out right there before the getting really got good. So I'm not real big on doing that. However, TP1, still off in the distance, 159.60. Really a nice, really good market structure here. I don't have a problem with your take profits. Your entry point, you killed it. That's beautiful. Your stop loss up here, right around 160, 193. If I have that right, I don't particularly care for that. I probably would have done something more like that. I would have put it above 162. Not a major concern right now, but maybe if this retraces up and you want to hold it for several more weeks. So this right here is a great problem to have. You're down there, you're around 160.24. You're up, about 80 pips, somewhere in there, 70 pips, let's say. Very nice payoff on this trade. So you've done everything absolutely perfectly. I'm just being a stickler about the stop loss. Putting something just short of a key level like a 162, man, at this point, if I was shooting for big profit targets like you are, I probably would be doing something, maybe even just like this, up around 160, 204, something like that. This is pretty good. Okay, guys, I'm going to get back to this trade analysis in just a second, but we've got a developing situation. Should we hold it or should we take the money? 81.54, 81.52. Should we hold it or should we take the money? Friday afternoon, only got about another hour of premium WTI crude oil trading. Anything can happen at the end of the day. Our profit target is way down there at about 80.62. What do you think? Do we hold it or do we take it right now? There was no pain at all here. Take it. Take it. No pain. High was 81.85 on a 74 entry. We took 11 tick draw just to come back and get a 25 pip winner. No pain. No pain. Did we miss out? We'll wait and see. We'll circle back around and see if that was the right call. For me, there was no pain. Remember, this trade's not over. We can trade up and get confirmation up there and then take a position again. This trade's not over. Let's wait and see what happens. All right, back to the Euro CAD. So the TP1 and TP2, by far the most difficult thing to do in all of trading is predicting where the hell these markets are going to go. No question about it. Where the heck are they going to go? How low does this market go? Euro CAD. First thing I would do, if I was in this trade and I was serious about letting it run to my take profits, I would make sure of next week's economic calendar. Anything that's going to impact the euro and the Canadian dollar. What's going to impact the Canadian dollar? Crude oil. So essentially, this play is that crude oil is going to keep rising. I don't disagree with you. I don't disagree with you, and it certainly is possible. But if crude oil reverses, this trade could be in a little bit of trouble. So as long as we know that. Still, though, you're positioned very nicely. The second thing, of course, well, first thing was economic calendar. Make sure there's nothing coming out for the euro or the Canadian dollar that's going to shake things. Number two would be crude oil. Those are fundamentals. When you're swing trading, you got to know your fundamentals because you're going to be in there for days and days. Technically, I like what you're doing here. This is a fantastic trade. Now, I believe it was made on the 1 hour time frame, which is fine. You can take a look at the 1 hour action. There's nothing wrong with this. Pretty good stuff. What do you have going here? Really a downtrend. Boom, pullback, boom, pullback, 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 and then bang, you're down, right? Okay. TP1. The way that I would scrutinize this is I would step way back. Everybody's going to roll their eyes. We're going to do it anyways because it's important that we understand if there's anything down there that could maybe stop us. Okay, we got a 13-period EMA right around 160, 159.91. Okay, so we already know this. We already know there's going to be something right around 160. So that would be a potential zone that could give us some trouble. That EMA right in there at 159.91. Okay, but if you're not using it, don't worry about it. Fibonacci, sort of from my point of view, spike there to spike there, very tight wave. You're beneath 62%. That's fantastic. I would be looking for probably a bit of a fight to break out between 159.75 and 160. However, it doesn't mean that it's the end of the road. So this is extremely viable here. I mean, this is a viable trade. I think you probably get your TP1. Your TP2, though, is down the queue a bit. So what I would recommend, if you're going to take trades like this, where you're in it for a while, this is a beautiful swing trade. It really is good. My compliments to the chef on this. When you're in this for a long period of time, you need to consider dynamic stop-loss options and dynamic profit taking. Now, if we were making this trade on, say, a 30-minute chart, or let's say, a 5-minute chart, I would probably tell you just to leave your stop losses and your take profits where they're at and just, whatever. Fate does what fate does. We win, we lose, we lose. That's what I would recommend on short time frames. On longer time frames, you've got a lot of time to think and evaluate what's happening. So for me, if I'm in this trade, do I do anything right now? Probably not. Am I aware, just by my technicals, am I aware of some areas that are going to be potentially a fist fight for me? Yeah, I know what's going to be there. I know 160 is going to bring a dialogue out of the market. And we also had that what was that, 91, somewhere right in that zone. 159.91 was our moving average. So we know this area right in here could put up a bit of a fight. Now, it doesn't mean that we just get out when we hit that area. It means we start observing price action. What happens when price action gets there? Let's say we get, a little bit. Let's take this right down to a 30-minute chart. Let's say we're watching this. You're sitting here. You hold it through the weekend. Let's say there's no big events. Price just sort of opens where it closes, which, sometimes that happens. Sometimes it doesn't. Let's say you get a Monday open, a Sunday night open that's right in this neighborhood. Okay. 30-minute chart. What are we watching? Well, maybe we start to see some action in here, which is great. Maybe we see something like a hammer setup. Ooh, not so good. Then we start to say, at what point do we start thinking about taking our profits? At what point has price reversed and I'm sort of in jeopardy of giving back a lot of my gains? That's how I would be looking to manage this in a dynamic fashion. But I got to tell you, the rest of it, we almost fall back on our fundamentals here. And I know there's not many fundamental traders in this room, and this trade probably wasn't a fundamental trade. But when you look at the actual trade itself, rock solid, you know what you're betting on. You're betting on rising crude oil prices. That's what you're betting on. As long as WTI crude rallies, then you're in good shape. If it doesn't rally, then you're probably going to see a retracement. Good trade, though. So that's sort of a trade analysis there. Do I think there's a chance of this hitting your take profits? Yeah, I do. Your take profit 2 is way down the queue, but I do like it. So as long as you're not getting eaten alive by your swap fees, which is another thing you have to be aware of, your swap fees. Is it costing you money or not? Then there's one way that we could find that out. Just go right here. Let's go over to Switch. Switch Markets. You go right up here to Tools. Let's go to our swap fee calculator. Where is it? I made a video on it. Forex swap calculator. Okay, let's go here. Choose an instrument. We want to go Euro CAD. Euro CAD right there. Deposit currency. Let's say US dollars. Type in your lot size. Let's say we're just trading a standard lot. Number of nights. So we've already been in this trade, 4 nights? Okay, so what are we sunk for swap fees? It may be a positive. We may be making money on that. I'm just going to keep this in dollars. Okay, so it is costing you money. No, it's not. Yeah, it's not as much money, but it is costing you money, about $460. So how much longer are we willing to hold this thing? Are we willing to hold this thing through 3 weeks or so? Okay, it's not that bad. It's not that bad. I mean, realistically, 1723, something like that. So that's doable on a swap short. So what does this look like then? For our actual cash, if we're trading one lot with profit targets that big, it really shouldn't be a factor. Just always be aware of those swap fees. The swap fees, if you're swing trading, can really eat you alive, and you got to be aware of them. All right, let's get back to our pet, U.S. oil. What's happening, guys? Should we take this again?
Pretty good call getting out of it, wasn't it? We're plus 220 on this trade. Should we take it again? Key levels 50%, 82 even. It's tradable. I don't like trading odd numbers either, so I usually have them as even. Let's go ahead and put a sell limit there. Sell limit. What is the game plan here? I don't know. Let's wait and see what happens. Let's manage it on the fly. Dynamic trade management, right? Ralph H. Got a question there from Ralph H. Why do you like the stop loss on the level that you like? Well, in this one particularly, okay, this stop loss right here is beautiful. I'll give you the U.S. oil example. Immediately, we know exactly where to put our stop loss. If I wouldn't have drawn all those crazy squiggle lines, you guys could actually see what I'm talking about. I don't want to hit clear all drawings either because then it's going to wipe out all this other analysis. Okay. Immediately, I know what I got. What do I got right there? I know I got a 13-period EMA, 13-week EMA coming down at 82.20. Where could my stop loss be that would get me in great shape? Let's put it right up there, right around 29. Now, that gives me my technical indicator at 20, and it gives me that quarter handle at 25. Now, that right there is a pretty good out. I know that if the market explodes up over my moving average, I gotta get out. I gotta bang out of there. So what does this really set me up for here? Take profit? We could do something like this. It's not a bad trade. Right here, do I like it? 50%, we're going to need help from that moving average. What would be a better trade? Maybe giving it more room to work? Maybe. But that's how I would be looking to set, Ralph H. That's how I would be looking to set my stop loss. So back in this EuroCAD, probably the first observation that I had here, I said, okay, this is good. Stop loss was right down here. I believe it was at 91. And I would say, okay, there was a reason for it, I'm sure. I'm sure there was a technical. Maybe it was a daily high. Maybe it was a short time frame, maybe a swing high or something. Maybe it was just a risk versus reward. I don't mind that stop loss because there is some rationale to it. It wasn't just picked out of a hat. So if I'm looking at that, I'm saying, okay, that stop loss right there, how can we make it a little bit better? And the way that I look at it is to say, okay, you went short at 61.12, right? Or 61.12. So if you went short from 61.12 and your stop loss is 61.92, you're already on the hook for like 80 pips or so. I say use that 162, something like that, because we see it time and time and time again. The key level, a lot of times the sellers are sitting there, and if that sell side liquidity wins, you may have just defended. You kept yourself in the trade. But another concept that I don't talk anything about, and I probably should, is that let's say you test your stop loss right up in here. Let's say we go up to like 61.94, and then all of a sudden we creep back down to maybe 61.50. The odds are still against us hitting our take profits. They really are. I mean, it's against us 50 pips. We're still sort of on life support. What about exiting right there? What about getting out and cutting our loss, saying, hey, listen, we were going to take an 87 tick loss. Maybe we only take a 40 tick loss. This is called dynamic trade management. It's hard. It's hard. But it's a way a lot of professional traders do it. They say, well, what are the odds of winning now? Not very good. Why don't we just take half the loss? Interesting. But it all has to figure into your profitability matrix, and you have to be consistent with these decisions. You know, one of the things that I like to do is, like, let's say price would have went down to hit this TP1 and we don't get filled. I just exit the trade. I'm not going to sit around and hope that it goes another tick and fills me. If it hits me and we don't get filled within reason, within a minute or two, I'm out. I'm just going to take the money, because this big of a move, we can't let 1 or 2 pips really cost us a lot of money. We can't. The move is what's the important thing. We need, as soon as this thing breaks in our favor, we've got to secure as much of that move as we possibly can. That is absolutely imperative. Job one. And number two, it should almost work the same way on the stop loss, shouldn't it? Just inverted. If price goes against you and it almost stops you out and then bounces back, maybe we're just cutting it off there, as opposed to just, oh, I'm going to let it ride. It's a lot easier. Listen, it's a lot easier to let this trade ride up here than it is down here for me anyways. I mean, it's like, okay, well, I'm already down 40 pips. I've got 40 pips left. Let's just see what happens. Typically, if you're in that position, you're going to lose. Typically you're wrong and you're going to lose. However, taking 40 pip loss is a hell of a lot better than taking an 80 pip loss, especially over time. I can't remember who was telling me that. They always stuck in trades. It was a real famous trade, a real famous guy. It was I always think it's Paul Tudor Jones, but it really might have been Paul Tudor Jones. He said, you know what? Instead of bailing out when you think you should bail out, just wait a little bit longer. Typically, it gets a little bit better. And he is right. How many times have we been stopped out by a pip and see the market reverse in our favor? The idea being it's just another way to really cut your losses, keep your losses smaller than your wins. That's an advanced topic, and because you can really get into deep water trying to cut your losses and cut your wins and do this dynamic trade management. In my view, it's the best way to do it, but it can be really difficult because you're making decisions. That's for sure. Let me see. Ina, you're the best. I don't know about that. Marcin, it was a daily high. Okay. Yeah. All right. No, I dig it then. If it was a daily high, I understand. I knew there was a reason for that stop loss. I knew it. So I probably would have I would have cushioned it a little bit, but still, you know, you got to put your stop loss somewhere. And nothing's perfect. So these are decisions that y'all got to make. That's for sure. Pretty good stuff there. All right, let's do one other thing, and then we'll cover Truth Social API, and then that'll be it. Our gold trade is pretty much dialed in. I'm feeling this one for Monday. I've already hit it a couple times, but selling right beneath June's low is probably going to be the play. I hate saying the word hope because hope's for losers and children. But if, in fact, I hope that we close up around here somewhere because I don't want the market to open beneath our hot level. This is a stop limit order or a sell stop. You can put a stop market if you want. Stop limit's better, and you're playing the breakout. You're a seller. You're a net seller under there, and that could be a really nice trade. I would be surprised if there isn't some selling under there, some longs getting squeezed out. Okay, SpaceX, trouble in paradise for SpaceX, 125.82. Let's take this right down to gold. Let's take a look at Augie Gold. Let's go right down to a 30-minute chart. Look at what happened here. Very, very important that you understand what's going on in the futures markets as well when you're trading commodities. You don't have to study it. You don't have to trade them. But just have an idea. That low right there, 30th of June, what's the low? This is Augie Gold Futures, 39.55, 39.55.4. This could be a real explosive situation. What's the low there? 39.63. This would be probably the trade I would be looking to build, potentially something like this. You could see a major washout. You could also bring this up to a scalp, something like that, potentially. This would be a prime example of how you would look to execute potentially on a 1-minute chart. That's what I would be looking to do. You're looking for an immediate washout. So on a breakout trade like this, especially in the futures market, see, we traded right down in there. That's big. Look at the volumes. Volumes came in and defended that zone. Once this zone's broken, you're looking for an immediate spike in volume and immediate positive move in price to the bear. If you don't get that, you probably have to exit and then look for some confirmation. But this kind of trade right here, this should wash out. I mean, this should wash right down to maybe 39.50 right away. That's about 67 ticks. That should happen within the first few minutes. Been watching those gold washouts for a long time, years and years and years. Those can be really, really, really good. Here's our Bollinger W from yesterday, a couple days ago. It was on a 5-minute chart. Got some pretty good gains out of it before we got stopped. And that's okay. That's sort of the way these things work. We were looking for that. You can see we got in right there. Pretty good rally. Went right up there to about 39.95, and we were in right in there, right around 39.89. It's a pretty good trade, and then it reversed and took you out. So that's sort of your prerogative if you want to stay in that trade or not. Let's go ahead and look at some market profile stuff. Not real big on trade market profile and TPO charts this time of day for gold. Typically, the market's pretty thin. Okay, what do we have here? Give me a TPO. Okay, volume. Okay, point of control buy. No brainer. You're looking right here. Spike low, about 9 a.m. Eastern. Gold is in full effect, trading a lot of volume, something like that. Spike low there to a spike high. What do you have? 38% coincides with the 30-minute Bollinger midpoint right around 4,003. Not a bad trade. That's not a bad trade. I love the point of control there, though. What's the point of control, guys? That's the area where we've done the most business. The price point where we've done the most business today. What is it? $39.99. Love it. Love it, love it, love it. You know you're going to get some action right around 4,000. You know you are. So if you wanted to buy 4,000 in threes, it's not bad. It's not a bad late day play. But this area right in here should be good for a pop. It really should be. Whether it is or not, always tough to say. All right, let's go and take a look at the S&P 500, E-mini S&P 500 futures. One of the big contracts out there. Look at this, just sort of a down. Look at how thin that chain is. Unbelievable. Look at that. That right there was the New York low. Remember, we traded the New York low yesterday. Should have taken the money and didn't. Or excuse me, I took a little bit of a loss there and should have waited. But you'll see exactly what happened. Price fell away. So us stopping ourselves out, pretty good idea, right? Take a look at how thin this is. We go up. We test price right up here, which was yesterday's New York low, and we come right down. So what's happening today? Similar price action. You're off about another 0.85%, but it's not really a trend. Not really a trend. U.S. session, opening bell, ding, ding, 9:30 a.m. Eastern time, be there or be square. Spike low, right up to the top. Look at this. This is beautiful stuff up here. Look, this is a great example of market profile trading at its finest. Top of value, top of intraday value, top of daily value. Look at that. Okay, there's your New York high established at 10 a.m., 30 minutes after. All right, 30 minutes after the open, and look at what happened. Boom, you're selling to the top of value, top of value. You're selling the top of value again. That trade right there at 10:30 a.m. my time, 12:30 p.m. Eastern. That's beautiful. That is beautiful stuff. That's playing rotation to the T. What do we want to do now? Well, we've got the value area low right here, which is right around 75.05 and a quarter. We've got 75.06, the 50% retracement. I don't care at all about that, but it does coincide with the value area low. Let's go ahead and line up and make a trade. Order, buy limit order. What do I want? 75. I want 75.05. What is it exactly? We want to know what it is exactly. 75.05.25. Let's go 75.05 and a quarter, and that's going to be our trade. Buy limit order. We're going to put two contracts on, playing for $25 a point. We're going to see if we can get in here and get a real tight scalp. This isn't a bad trade. The real question you'd have to break down is, what do you think about your entry point? Could we make the entry point better? Let's dial this Fibonacci's in exactly. I'll tell you in a second. Coordinates. What's the New York low? New York low 774.73. $74.73 even. What's the top side? Top side right there is 75.39. Even. Okay. That value area is 75.05. 75.06 is 50%. Let's split the difference. Let's go 75.05.50. Let's do that. Pretty good entry. What would we be looking for here? $25 a tick. We're not doing anything with a stop loss just yet. That's what we want. Let's go for a cool $200. 2 points. Should get that. Should get that. You'll notice the timing is the same as it was yesterday. Going right into 2 p.m. Eastern. We've got a good distribution. We've got a lot of volume on the board. There's a lot of evidence that supports this long. The thing we did wrong yesterday is we sort of bailed out a little too early. But if you take a good look at what happened since we bailed, that was it. We bailed right here. We probably could have got the scalp payoff, but that was it. That was it. Pretty good move getting out. If you're good at getting out, you can be good at trading. That's for sure. All right, we're going to go ahead and watch this one just for a second. I got something else that we need to talk about, though, before I sign off. This is a pretty good one. This one made me laugh when I saw the story. So, all right, probably the last thing we're going to cover today is the Truth Social API. This is something I saw on a podcast yesterday evening, and this story broke yesterday. New Truth API service to monetize Truth Social posts. So Trump, the president of the United States, pretty much issues all of his big announcements on his own social media platform, Truth Social. Well, Truth Social is, I believe it's a Trump family pretty much is a major shareholders in Trump Media. So this is part of the Trump Media Group. But you can see that it launches a paid data service to help Wall Street track Trump's posts. That's not at all. That's a misleading headline. Truth Social to sell trading firms the fastest access to Trump's posts. That means that if you pay money, you can get access to the Truth Social posts before anyone else does. So if I'm trading, Marcine's trading, and Babjeez is trading, and Ralph is trading, and I buy the Truth Social post, I get the API juiced into my platform, I'm going to get the posts that are going to impact the markets, and I'm going to get them faster than you. That means that I can position, I could be buying when you're selling, and I can be selling when you're buying. At its core, this is insider trading, no question about it. However, it's not unprecedented. We've seen things like the Bloomberg, the Bloomberg framework. They had really a high quality news service where you would get economic events, economic numbers faster than the rest of the market. The University of Michigan Consumer Sentiment Index used to be able to subscribe to that and get that faster than the rest of the market. But there's one major difference here. It's that Trump's the president of the United States and he can make the news. If he knows that they're going to pull out of Iran and he says it on Truth Social and I get that 30 seconds ahead of you guys, I'm already gone. By the time you guys are in the market trading and covering your positions and taking new ones, I'm already gone. And this is designed for high-frequency algorithmic traders. This is designed to game the markets. I don't know how this is legal. I don't think it's going to be legal very long. But this right here is unbelievable. Absolutely unbelievable. One day ago, the product called Truth API will deliver posts from the 10 most influential accounts to customers at a faster pace. These customers, these 10 influential customers, are policymakers. So if you're making policy, you're driving the markets. That means if you could be on Polymarket. Remember what we talked about yesterday with the teleprompter operator making 90 grand on Polymarket, betting on what Trump was going to say. It's absolutely, absolutely incredible that this stuff could clear something like the SEC or the Securities Exchange Commission or the CFTC, the Commodities Futures Commission. I'm really surprised. This is bold. This is really a bold move, and if this is successful, it will revolutionize the markets. You will start to see those big moves we talked about. I put a post in the YouTube chat earlier today about the insider trading short that I made, and it showed crude oil moves and then S&P 500 moves before big announcements came. That'll be the new face of the market. You'll see things like Elliott Wave won't matter anymore. Things like your technical analysis, it's going to all be about fundamentals and who's got the tip and who doesn't. Now, of course, after a while, these will just they will seamlessly enter the marketplace. People will buy it, and then they will be leaking it, but it'll always be a little bit delayed. It's one of the biggest things I always said about the electronic marketplace. The electronic markets, they sort of let all of us trade, but they opened up a big gap, and there's a big gap between what I can get done speed-wise and what like Citadel and some of those high-frequency firms can get done. They can beat me in and out every single time. And if they have the news and they know which events they're going to trade, it's like it's a license to print money. So to me, I don't know even how that's legal. I don't even know how that's legal. I really don't. But it looks like it is. All right, everybody. It looks like, there's your point of control. We could have just sold the point of control right here if we were trading this E-mini S&P 500, but I was too busy running my mouth about Truth Social posts. That right there was a beautiful scalp. Your point of control, 75.16 and a quarter, and you're right back down to about 75.15. I mean, that was really a high profile, high potency scalp. Really liked that trade. That was a good one. So I would probably just ditch the Fibonacci's now and just look for price maybe to play right around in here. Maybe you get a big run and run at today's lows, but I doubt it. More than likely we're range bound and probably going to trade right in this zone. That's why we would try to capitalize on a rush toward the bottom of the value area for today. Truth for Sale Social, laugh out loud. I'll tell you what, I mean, listen, it doesn't really matter what you think of Trump. Love him, hate him, whatever. The innovative ways that they have made money off the presidency blows me away. I mean, he reported his earnings today. He made $1.5 billion in the first year. Trump did personally, and most of that was off of crypto. Liberty Capital, which was their crypto firm where they were running their Melania coins and Trump coin and things. Crazy. That right there was a fantastic trade right off the point of control. Really a dandy. Really a good one. You can get these trades every single day. They're there every day for you. The big thing is just don't let one of them get away from you and take a big loss. This in here is pretty good stuff. That's a pretty good trade. Market profile, TPO charts, pretty damn good way to approach the markets on rotational days. So we missed that one. Should we still take this one? All right, I'm down. Let's give this a few minutes, and then I'm going to get off. I ran way long today. volumes, realistically, this is what we want to see from our volumes. I don't want to see any big spikes of volumes. I want to see this just absolutely flatline like this. That's what we want. Looking at a buy limit order from about 75.0550. We could probably justify going at 75.06. Let's just wait and see what happens. We'll give this a couple minutes. We already hit the crude oil trade for 200. Let's see right here, actually. We're going to get a crack at this one right here as well. Here's our sell limit. Right now we're sitting right at U.S. oil. We're sitting at 81.94s. We're at 81.93s. We should get filled up on this. Could be an interesting trade for us. Okay, there it is. Let's take this right down to a 1-minute chart. You can see we're still trading those long-term levels. Okay, there's your shot. Right there, we're looking at about 12:06 my time, so about 2:06 p.m. Eastern. Typically, we get a move in the last 30 minutes of the day on crude oil. Okay, we could be in trouble here. Let's wait and see how it pans out. All in all, what's our trade? Stop loss is up above that weekly moving average, right around 82.29. That's about as deep as I want to go here. I don't want to hold it into perpetuity because we know going into the weekend there could be some heavy bidding here towards the end of the day. Now this trade, jury's still out. I mean, we ran right up to 82. We rejected that area. We're back down, but we're back to 82. This is where the fight is. This is intraday scalping. This is what it's all about, guys. We're fighting at 82. We have to be able to read price action. So right here, I've got some decisions to make. Number one, I can stop myself out right above that swing high. I can do that. We did it yesterday with the S&P 500. Or we could let this thing twist. Let's let it go and see what happens. What are the odds of getting a sell-off potentially towards the end of the day to 81.56? Probably not great. Probably not great. It's possible, though. I mean, we just traded down here a few minutes ago. See right in here. If I'm hyper-aggressive and I'm scalping, what can I do? I could tighten the stop loss. What does it look like? Did we get a jam right to like 82.09, 82.07? So we could do something like this, bring that stop loss right down, bring our trade up, and look to get out right now. It's not a bad idea. It will definitely protect us better. But if our risk is already built into this trade, do you really have a problem letting it run? I don't, because I know what K period is. Right now we're in the midst of K period for WTI crude. What does that mean? It means that there's your move. K period, we took K period right up above J, JKL, LMNOP, ABC to EFG, HI, JK, J period, sorry. So that 30-minute bar is J period. K breaks over J, and now you're fighting with this resistance zone, which is what? About 82 flat. As soon as you get established above 82, more than likely we're going to get run out of here. However, if this market reverses from 82 and we start trading back down in here, towards the end of the day, you can get this trade. This trade can hit your take profit. There will be enough action in there in the next 20 minutes to drive this market potentially either significantly lower or significantly higher. So what I would recommend managing this trade, I probably wouldn't jump on a 1-minute bandwagon and bring my stop loss way in. I probably wouldn't do that. What I would do is wait for this 30. We're looking for this bar potentially to reverse and trade back down into that value area around 81.56. I don't hate that idea. I can see that happening. We're definitely going against the trend today, though. We're up 3%. Is there going to be some profit taking late in the day? I would think. So potentially that's not a bad trade, but here's the kicker about this trade. We are fighting the clock. You've only got 21 more minutes of premium WTI crude oil trading, and then after that, you're going to have probably, another 2 hours of the market just sort of twisting before we go into that the weekly close. So if you're holding shorts, you've got to get out before the weekly close. I would mark that as probably being as long as you can hold this trade. So the real question becomes, do we want to take another scalp off of this thing? Maybe if we get the market, it's starting to move in our favor. Now it's down to 81.87. Do we want to start looking for maybe a 79? What does a 79 pay us? Is that doable? What does something like that pay us? Maybe a 71. Is that worth it? Do we want to bring this stop loss down here? Could we? You can make it really tight if you want. 1-to-1. I mean, if we do that, we're pretty much almost out. Is it worth it? I sort of have to leave that up to you guys. For me, if they're going to pay us $170 right now, I'll take it. We'll throw that in with the other 220. That's $390, and we walk. It's not a bad day's work just for trading for an hour here. It's not bad. The real question becomes, what do my odds look like when I tighten up like this? They're not great. Really, our opportunity at success here did get a little bit lower, but it's starting to look pretty good for us now. Let's go back down to our 1-minute chart. Okay, so we've got some pretty good stuff happening here. 1-minute chart. Volumes are dropping off beautifully. You can see the massive spike in volume. Very important. You see, and this is tick volume. This is U.S. oil, but still, you saw a lot of action right there, a lot of movement. There was your spike high up above 200, 82, 8,200, 82 even. Big hammer comes in, sellers step up, drive the market down. So the question now becomes, what do we want to do? We could have taken $100, or do we want to ride it out? Put our stop loss back up there at 29 and see exactly where this thing closes today. The safe thing to do is to put it above the swing high. The thing I'm worried about is getting caught up in a bonanza up there right around 82, stopped out, and then the market reverses. That's for sure. Let me see Mandy. Good to see you, Mandy. Welcome. Can you give me a summary of your strategy of what you're looking for, a top-down analysis? Yeah, I mean, it's Fibonacci retracements, and we work them on top-down analysis. Is going to be monthly, weekly, dailies, and then we get into the midday stuff. Typically on my midday stuff, I'm looking more at market profile and using that with Fibonacci retracements to try to identify some big-time zones. But, and then the Fibonacci's, the way that they all line up. It's all over at howtotrade.com. I'll give you the link. You can go over there and check it out. See, look at what's happening to us now. We're fighting a trend. What I would recommend, Mandy, is to go into this howtotrade.com, get your free subscription, sign up for free. And then go into our trading academy, go to the elite trading series and click on the Fibonacci counterpunch. And you should be in a decent position there to get to all of my Fibonacci counterpunch materials, which will show you exactly what I'm looking at. Okay, E-mini S&P 500 futures. Interesting stuff right here. We got another trade going. Let's see if we can get it right here. Crude oil trading right at 82. So we gave back all those beautiful gains we just had. It's going to be a wild finish for WTI. Absolutely, man. Yeah, check it out. We've been over at How to Trade for years and years. Let's see if we get this one. WTI still trading right around break even. And that exactly is what we wanted. So the low right there was 75.06. That should have been probably our entry. Should have been our entry. Let's back off. Let's go 30-minute chart. Okay, so now you've got 02 down here. That's going to be the bottom of your value. You can see your value got extended. Why did the value area change? The value area changed because we rolled over to the 30-minute bar, and all of a sudden we started doing a little business. But look at this. Where does the bottom of value, right there, where does the bottom of value coincide with? It's right around our lower Bollinger Band. So we've got a little bit of reason here to take this trade. Remember, trading's dynamic, guys. Especially if you're doing something like market profile, it's dynamic. 75.02, I like it. I mean, I think we could easily get a two-point bounce there. Okay, U.S. oil's trading right at 82. Don't love it. I don't love it. See if we can get a few of these trades. I like to execute a few trades before we go home for the weekend. That's for sure. Give us another few minutes, then we'll go ahead and sign off. U.S. oil trading 82, so still nothing's been decided there. We're watching it closely. I'm watching it out of the corner of my eye, and I'm watching this setup here. What do I think about the market structure? Man, look at that. That was the sell right off the point of control. Volumes picked up. Okay, now we're coming off. So we're coming off. Now, one of the good parts about this lower value area, right, what we're going to be watching when we execute this trade is I want to see price action right at 75. So we're going, we're loading up, we're buying right there, 75.0250. I want to see what price action does right at 75. Okay, we're still watching. The market's creeping down. It's creeping down. It's creeping down. We're going to sit. We're going to sit and wait. Okay, that's a pretty good kick right there. Now finish the trade. Finish the trade. Finish the trade. Finish the trade. Right there, 75.04. Give me 04.50. Give me 25. 04s. Sellers are dug in at 04s. Give me 04.50. Okay, didn't get it. Skeptical. We're looking for 04.50s here. 04, what happened? The seller stepped in a big way at 04. Now we've got to start thinking about getting out. Okay, there's the bounce off of 75. Let's give this another minute. 75.01, 75.01. Let's go ahead and stop ourselves out underneath 75. Let's go 49.50, something like that. We're going to leave that for a second until we get tightened up. That's my insurance. We just protected the position. Now, this is a close but no cigar because we were right up there. We were right up there at 04.50 thinking we were going to get paid off. Pretty good opportunity there. We just didn't quite get the tick up over 04. So the asks are winning the battle at 04. So what do we have? 26 more seconds. Let's hold. Let's hold right here. The action is definitely bearish, though. No question about it. We're testing the bottom of value here, which is incredibly difficult. Realistically, this is right here is where we're figuring out if we're going to trend to the south going into the daily close or we're not. A lot of action, though. Plenty of action in here for us to get paid off on a little scalp like this. This is not a big trade. Little scalp, we're looking to make 200 to the top side. We're not going to be risking 300. Okay, right there. We're going to go ahead and we're going to put that stop loss right there. There's our protection. There's our one-to-one trade. Now, we need to see the guy that's hanging out at 04 is winning the battle. Whoever the hell's selling 75.04s is winning. 75.03. We got to take out 04. Take out 04. You've got to get 04. If we don't get 04, we're dead ducks. 05.02, 05.50. All right, we're in trouble here. One more run at it. One more pump. One more pump. One more pump. See if that liquidity is still there at 04, 03.50, 03.50. Look at that. Market stops dead at 05, 02, 02.75. We're in a very, very hot zone right here. A lot of action right here. 75.02, 75.02, 75. Give me 03, give me 03. This is going to be a challenge, guys. 20 seconds left in this price bar. This is going to be very difficult. Let's see if we wind higher from here. I have no problem just ripping the Band-Aid off and taking the loss. Remember, we had to yesterday. It got us out of some major trouble, too. 25 right there. 25 right there. Come on now. 03, 03. Okay, let's see. Here comes another run at 04. Do we get it or don't we get it? All right, there it is. There's the pump. 04's got to go. 04 goes, we win. Okay, we got a great shot there. 04 and a quarter. They're still there. They're still there. Somebody's still there knocking us down at 04, 04, 04, 04. The bidders can't win there. Absolutely unbelievable. So you can see what we're dealing with here. Couple of things we can do right now. I could look for more out of my profit target. I could do something like this, move it up to this order block, so that way if we do break up over that 05 level, we make a lot of money, or I can cut this thing off and just take the money, take the profitability, and go home. We're in this trade almost 3 minutes. We're sort of fighting the downward trajectory of what I would call not necessarily a trend day, but definitely a bearish day. Now we're down 25. Now we're down 100. We could be in big trouble here relatively quickly. Beautiful, though. You can see that we're onto something. This is a hot zone. This is definitely a hot zone. We should have already been paid off, though, guys, and we got to start thinking about moving towards the door. We would love one more kick higher, but are we going to get it? We don't know. There's your open lower, 75, 25, negative 75, negative 50, back to flat. Okay, back to plus 25. Are we finally going to get filled up here? Plus 50, plus what? Plus nothing, minus 75. This trade's going to go against us more than likely. I'm going to go ahead and cut it, like negative 75. We gave that thing every possible chance to succeed. Every possible chance to succeed. The sellers, the asks were dug in right up there. They were dug in right up there at about 04, 04 and a quarter, and that was really a challenge. Me personally, you can see we took a 75 loss. Let's go ahead and pull it up. I mean, this is scalping, so let's go balance history. So right there, we took a $75 loss. $75 loss. We would have got nailed and taken, what, our $200 loss? We probably should have had a stop loss beneath this. We could take another long right here if you wanted to chase it. Market very, very choppy. Why do you think it's choppy like this? It's right above 7,500. If the bulls win, this market spins way high. If they don't win, if they lose, take a look at your low. What's your low right there? 75, 75, 75. You're right there. This market breaks. It breaks lower. I think we did a pretty damn good job taking a 75 loss on that. So right there would have been our stop loss. I would be very skeptical of this. Could you go short now? You could, but you got to watch that. You got to watch that too. Changing your mind mid-trade can be really tough. All right, so in any case, that's the good price action there. I'm pretty sure that we did the right thing, but you never know. U.S. oil coming off a little bit now. You can see we're sort of printing. You could go a number of different directions here. You could try to get the big money down there, maybe 81.61, or you could bring your stop loss down. You'll notice that test of that loss, swing high right there. Look at that test. That's why you always pad your stop losses a little bit over those swing highs and beneath the swing lows. Still, though, in the green. We'll see where crude oil finishes. I think we got a pretty good opportunity to win there as far as taking the small loss on the S&P 500. I think once you break beneath 7,500, it could be really ugly for the bulls. All right, guys, that's a little bit of scalping. I just wanted to have a little bit of fun on a Friday. Go through some of my thought process when we run these trades. Big picture, it was a heck of a week. Had some really great trades. The long-term levels are what I like trading. Those are a lot of fun. The short-term stuff, like that market profile, the biggest thing you've got to do is manage your risk aggressively and don't let them get away from you. If they break and trend against you, don't hold them thinking they're going to come back, because a lot of times they don't. Let me see. Eli, you're long now, 75.02. No, thank you. No, thank you. I think if I was picking, I would probably go short right there, the E-mini S&P 500. You could do it. You just got to break 75. Nah, I don't want any part of that. We may get up and print. What do we have to print? 5, 4.5? Yeah, well, there's your break. So potentially you could have got paid there, but I think I'd rather be holding shorts. We gave that trade every chance that it needed. Small losses, I'm cool with small losses. Big losses are what upset me. All right, everybody, I'm going to go ahead and sign off. We went way long. Did a lot more trading this week. I don't know if it's something we're going to do in the future more. We may be adding some streams to the schedule and doing more of this stuff where we just sort of think out loud and place our trades and look to make money. I have fun doing that, but I don't know if it's useful or not. Might just be boring everybody to death. But we'll go ahead and get on with the program next week. So right now we're sort of holding some WTI shorts into the close, about another 10 minutes or so, printing 81.89, starting to look better. E-mini S&P, though, consolidating right around 7,500. Don't be surprised if it falls away under there. That's for sure. Long now, you were too early. Nope, Eli, I was perfect. Sorry, I was perfect. I knew exactly when to get that one. Sorry, we were perfect on that one. All right, everybody. Joshua, good to see you. Thank you. You're absolutely welcome. Okay, guys, I'm going to go ahead and sign off for right this minute. Why don't you guys have a fantastic weekend. Have a great trading day. Finish strong. Don't give anything back if you're up on the week. And as always, trade the action well, and we'll talk soon. See you. A quick one before our live stream starts. If you're not already subscribed to our YouTube channel, we go live there every day trading the markets, covering world news, and talking through setups in real time. Hit subscribe so you don't miss the next session.
Still doom scrolling? Brain rot taking over? You'll focus tomorrow, right? But what if tomorrow never comes? What if it all started with one small choice? The world won't wait for you. Opportunity is moving right now. One decision is all it takes to shift your momentum. Fuel your mind and watch possibilities open up. Small wins stack up, focus sharpens, growth begins. Everything changes the moment you focus. Lock in and make the switch today. Bring your ambition